For decades, investing in assets like real estate, bonds, or private credit required large capital, paperwork, and access to exclusive financial networks. But in 2026, a powerful shift is happening. Real-world asset, RWA, tokenization, is bringing traditional assets onto blockchain networks, allowing them to be represented as digital tokens. This process is changing how ownership works, how investments are traded, and who gets access to financial opportunities. This video is all about the real-world asset tokenization and the future of investing. If you want to understand how RWA tokenization is reshaping global investing and why major institutions are paying attention, stay with me until the end. What is real-world asset, RWA, tokenization? Real-world asset tokenization simply means converting ownership of a physical or traditional financial asset into a digital token on a blockchain. These assets can include real estate, government bonds, corporate debt, commodities, or private credit. Instead of holding a paper certificate or relying entirely on centralized registries, investors hold blockchain-based tokens that represent legal ownership or claims on the underlying asset. These tokens can often be transferred more efficiently than traditional assets. The key benefit is transparency and programmability. Blockchain allows real-time tracking of ownership and faster settlement compared to traditional systems that may take days. In 2026, this concept is no longer theoretical. Institutions and fintech platforms are actively issuing tokenized bonds and funds. Videos explaining RWA tokenization from financial analysts and crypto researchers are widely available online, demonstrating how the system works step by step. RWA tokenization is not about replacing traditional finance. It is about modernizing how assets are recorded, transferred, and accessed globally. BlackRock and the institutional shift toward tokenization. One of the strongest real-world signals of RWA adoption is the involvement of BlackRock, the world's largest asset manager. BlackRock launched a tokenized fund on blockchain infrastructure, showing that traditional finance leaders are actively exploring digital asset integration. When an institution of this size enters tokenization, it validates the model. BlackRock's move demonstrates that blockchain can be used not just for cryptocurrencies, but for traditional investment vehicles like funds and bonds. This is important because institutional participation brings compliance, regulation, and large-scale capital into the ecosystem. It bridges the trust gap between crypto-native systems and legacy finance. You can find extensive interviews, conference discussions, and financial media analysis online explaining how BlackRock views tokenization as part of the future of asset management. This development confirms that RWA tokenization is not just a startup experiment. It is being adopted at the highest level of global finance. Tokenized U.S. Treasury products. Another real-world example is the tokenization of U.S. Treasury products. Several blockchain platforms now offer tokenized exposure to government-backed securities. This allows investors to access yield-generating assets through blockchain-based tokens rather than traditional brokerage systems. The benefit is faster settlement, global accessibility, and programmable compliance. In 2026, tokenized treasury products are among the fastest-growing segments of RWA markets. Financial news platforms and crypto research firms have documented this growth in detail. The reason this matters is stability. U.S. Treasuries are considered low-risk instruments in global finance. Bringing them on-chain shows that tokenization is expanding into conservative financial territory, not just speculative markets. This is a strong sign that blockchain is becoming infrastructure for serious capital markets. Real estate tokenization in practice. Real estate has always been a high-barrier investment class. RWA tokenization changes that by allowing fractional ownership. Platforms like Propi have facilitated blockchain-based property transactions. Instead of traditional deed transfers requiring lengthy processes, ownership can be recorded digitally and securely. Tokenization enables investors to own a fraction of a property, rather than needing millions to buy it outright. This increases liquidity in a historically illiquid market. There are publicly available examples and walkthrough videos showing how tokenized property transactions work, making it easy for viewers to verify the process. This demonstrates how RWA tokenization is lowering entry barriers and increasing global participation in property markets. Faster settlement. Compared to traditional systems, traditional financial settlements can take 2 or more business days, especially in cross-border transactions. Blockchain systems operate nearly instantly. Tokenized assets settle on-chain within minutes, reducing counterparty risk and capital lockup periods. For institutional investors, this improves efficiency and reduces operational costs. For retail investors, it means quicker access to capital. In financial markets, speed equals opportunity. RWA tokenization introduces programmable settlement mechanisms that traditional clearinghouses struggle to match. This is one of the most practical advantages driving adoption: increased liquidity for traditionally illiquid assets. Assets like private equity or commercial real estate are historically difficult to sell quickly. Tokenization introduces secondary trading possibilities. By representing ownership as digital tokens, these assets can potentially be traded more easily on regulated marketplaces. This increases liquidity and price discovery, making markets more dynamic. Liquidity expansion is one of the strongest arguments for tokenization in 2026. Transparency through blockchain records. Blockchain provides an immutable ledger. Once a transaction is recorded, it cannot be easily altered. For investors, this increases transparency. Ownership records are visible and traceable. Traditional finance relies heavily on internal databases and intermediaries. Tokenization introduces open verification layers while still maintaining regulatory compliance. Transparency builds trust, a critical factor in financial markets. Democratization of global investing. RWA tokenization opens markets to a broader audience. Investors from regions without direct access to certain asset classes can participate through blockchain platforms. This democratization reduces geographic financial inequality and increases global capital flow efficiency. Access expansion is one of tokenization's most transformative impacts. The long-term vision, hybrid finance. RWA tokenization does not aim to eliminate traditional finance. Instead, it integrates blockchain into existing systems. The likely future is hybrid, traditional institutions using blockchain rails for settlement and ownership tracking. This balanced approach maintains regulatory safeguards while leveraging blockchain efficiency. In 2026, this hybrid financial infrastructure is already forming. Real-world asset tokenization is not hype. It is infrastructure in development. With institutions like BlackRock entering the space, tokenized government securities gaining traction, and real estate moving on-chain, the transformation is measurable and real. RWA tokenization represents a future where investing is faster, more transparent, more accessible, and more efficient. The evolution is happening now. If you found this breakdown valuable, make sure to subscribe for more in-depth finance content. Comment your thoughts about tokenized investing below, and share this video with anyone who wants to stay ahead in the future of investing.